Good day, everyone. I'm Ethan, moderator for this webinar. I welcome everyone for today's webinar, Employee Retention Credits. I would now like to introduce our presenter for today, Jason Dinson. Jason Dinson, LPA EA, is an entrepreneur, tax expert, and CBE presenter. I would now like to hand over the floor to the one of the best speaker of taxation. Over to you, Jason.
All right, thank you very much. With that introduction, I guess I really better make this presentation really good. Make sure I live up to the hype here on this Employee Retention Credits webinar. So thanks for joining us. This is a 60-minute webinar. So, our agenda today is Employee Retention Credit, and the vast majority of our time is spent on how to qualify. That's probably really what 90% of this webinar is. Planning reminders, I know that's the first item on the agenda, but really planning reminders plus potholes on the ERC, that we sprinkle in throughout our hour. So on this slide here, we try to define what the employee retention credit is. It's a tax credit, a payroll tax credit that you claimed on your Form 941 quarter to quarter, as long as you qualified, from the first quarter of 2020 through 2021, either the third quarter or fourth quarter, depending on how you qualify. Let's get into qualifications. March 13th was the start date of ERC, and it was in place through either September 30th or December 31st of 21. So there's three ways to qualify. Shut down by government order is one way to qualify. Declining gross receipts, or being a recovery startup. This means your business must have been shut down by government order, a written government order. Partial shutdowns count. Now note the word generally thrown in there. Generally, there's some potholes on the shutdown provision. Who are we kidding? There's potholes everywhere on the employee retention credit. But as it relates to the shutdown test, what about working remotely? There was a government order in place shutting your business down, but you were able to continue with people working remotely. This is something that the IRS came up with in Notice 2021-20, and it affects businesses where part of your business was shut down and part of it was not. So the bottom line on shutdown. Some other things on shutdowns, what might qualify, even if there wasn't a direct order against your business, you might still be able to qualify under things like shelter-in-place orders. By the way, qualifying under the shutdown provision is available from March 13th of 2020 through September 30th of 2021, so through the third quarter of 2021. The second way to qualify is under the gross receipts test. When you're doing the gross receipts test, that you have to use the same method of accounting as you use on your tax return. You also have to make sure that you're finding other income items. Generally, it's going to be better to qualify under the gross receipts test than the shutdown test. And then the third way to qualify is to be a recovery startup business. Businesses that started after February 15th, 2020. We have to talk about business aggregation because this explains that $1 million gross receipts restriction. So aggregation can sometimes be helpful. This slide here just gives what the examples are of aggregation. This slide here just talks about the different entity types that are out there. The credit is based on wages paid. So the way you do the count is you look at 2019 and look at your payroll and go month to month. And each month you're doing a count for that month. Now we can determine wages. And here's where that employee count comes into play. If you're below the employee threshold, 100 for 2020, 500 for 2021, then all wages count. In addition to what you would think of as wages paid, you can also count health insurance premiums. Wages paid to shareholders who own more than 50% of the business generally will not count All right, now we're at a point where we can determine the credit amount. For 2020 claims, the credit is 50% of wages paid to your employees. PPP loans is where we turn next. Most businesses received PPP loans, especially the round one PPP loans in the spring of 2020. And so it all keys back to what you put on the forgiveness application form. One slide on FFCRA, Families First Coronavirus Response Act. This was another tax credit where businesses had to pay certain COVID-related sick leave tax returns. People ask, is ERC taxable? The answer is you are amending 2020 if it's a 2020 claim. You're amending 2021 if it's a 2021 claim. By the way, again, the IRS has confirmed this multiple times. It's also in the tax code, section 280 capital C. What is the statute of limitations? You have 3 years to amend. This slide here is the statute of limitations for you to make a claim. So I will send it back, but stay on the line here for any questions you might have. Thanks so much for your time and attention. And
Thanks, Jason. That was a wonderful webinar.
well, just thanks so much for joining us. This is obviously a very complicated subject.
Thank you everyone for participating. You may all have a great day ahead. You may all disconnect now. Bye-bye. Take care.